Well, hello, welcome. I'm Amy Anderson, and today I have the pleasure of speaking with Chase Brakke. Chase is the Vice President of Business Owner Solutions at North Star Resource Group. And I asked Chase to join us because I get lots of questions about what types of insurance policies are needed for plastic surgeons, particularly those who are starting a new practice. So I thought no one else better than Chase to come walk us through what those needs are. So Chase, first of all, give us a high-level overview. What is North Star Resource Group and your role as Vice President there?
Absolutely. So we're an independent financial services firm that operates nationally. We do everything from personal financial management to business planning, helping with succession planning, all the insurances you can think of, really to help provide a well-rounded solution for everybody we work with. So being independent, I think, is the biggest key there because we can shop the market, especially on the insurance side. My role as the Vice President of Business Owner Solutions really is just to work with the business owners to figure out where can we add value and what can we help them with. Usually, as a practice is starting out, it just is starting with insurance. As they progress and mature, we might be doing things like employee benefits. And then as they're nearing the end of their career, now we're looking at how do we help them get out of the business and then the distribution planning for their assets thereafter. So it's all over the board, but we try to do everything possible for our business owners.
Terrific. Well, we're glad to have experts like you to refer to and to bring in when needed. So particularly in starting a new practice, one of the first things that I tell a surgeon they need to be looking for is business owner's insurance. And often this is their first time starting a business, and it's a little bit of a foreign concept of what is business owner's insurance. Can you tell us what that entails and what all it covers?
Yeah, absolutely. So in our world, we call it a BOP, or a business owner policy, and it covers both property and liability. So when you think of the business entity itself, the business can be sued for anything related to business activities. And even though you might carry professional liability for the professional acts that you might be performing, the business also carries some form of liability. So the business owner policy will have a layer of liability insurance, and then wrapped into that are a host of all kinds of other insurances, such as property insurance, covering the building if you own the building, or covering just the business personal property, which would include things like your office chairs, your computers, any equipment that you have. So that's all going to be wrapped into one policy. And then there's other things you can get added into it, usually for smaller amounts, which is good if you're just getting started. Things like your employment practice liability, cyber liability, even some commercial auto a little bit. So there's a number of things that you can get added into this packaged policy.
Okay. So why would a plastic surgeon need this policy, and how much coverage should they be looking for?
Yeah, so every business should carry some form of liability coverage, right? Because again, the business itself can just be sued for pretty much any reason, whether it's naming rights of your business. Somebody feels like you stole their brand. Let's say somebody feels like you, damaged their image for whatever reason. The business can be sued. As far as limits go, really, starting out, specifically in plastic surgery, your practice will have a lot of assets in terms of revenue that you'll make, because you'll be a high revenue business compared to, let's say, an electrician, right? So because the revenue is so much higher, you can be sued for a significantly higher amount. So generally we say as you get started, you want to have at least $2 million per occurrence, $4 million aggregate. And then we always add an umbrella policy on top, usually starting out at about $1 million of coverage.
Okay. Well, that was going to be my next question, because I do sometimes get asked, do I need an umbrella policy? Can you explain just a little bit more what that means?
Yeah. So if any of you are familiar with how an umbrella policy works on the personal side, it's a liability policy that sits over all of your personal coverages. An umbrella policy or an excess liability policy for businesses does the same thing. You have a lot more things you can be sued for as a business owner, and you carry different types of liability. So this umbrella will sit over the top of all of your other liability policies. So as you think of your business liability, there's just the general liability, but you might have some cyber liability in there, as well as some employment liability. So there's a handful of things that you could carry liability for. This umbrella policy sits over the top of that. So in a situation where your business gets sued, technically, per occurrence, you would have $3 million of coverage, the $2 million from the business owner policy, and then the $1 million of umbrella. It's a lot cheaper to add layers of umbrella coverage than it is to keep growing that underlying policy with the business owner plan, because it's covering a host of different things. But this umbrella layer, you can add a lot more effectively and cheaper.
Okay, that makes sense. Well, so you brought up a couple of additional coverages that I definitely want to talk about. You mentioned the employment practices liability. What is that, and why would a doctor need that coverage?
Yeah, so once you become an employer, now you have an obligation to your employees, and with that comes some liability. So employment practice liability protects you, the employer, from being sued by your employees. The Department of Labor has a lot of guidelines and rules around how you treat employees. Depending on the size, those rules can vary or change, but again, there could be a host of reasons why your employee might want to sue you as the employer. Something as simple as a failure to promote, or sexual harassment charges, verbal abuse. We see that sometimes where people take emotional damage from their employer. So there could be a host of things that your employer might say, I don't feel like you've been treating me well. I'm going to take you to court. This will protect you specifically on the employment side.
Okay. And so is that generally part of the business owner policy, or is it a separate insurance cover, or could it be either way?
Yeah, so it's not automatically included. So that's something you want to make sure does get added to it. Now, as you're getting started, you might only have 1 or 2 employees. So having a employment practice liability piece added or endorsed onto your business owner policy is a great place to start. As your practice grows, you're going to want to have a separate policy for that, because you're just going to need higher limits based on the number of employees you're going to have and the wages that you're going to pay them. So the most you can typically get as part of your business owner policy is usually going to be about $250,000, depending on the carrier. Some might cap at 100, but once again, you've been around for a couple of years and you have maybe 3-4 staff, now you might want to start looking at getting a policy outside of that with higher limits.
Okay. Well, like most insurance policies, we hope we never have to use them, but if faced with any kind of labor lawsuit, definitely don't want to be uncovered in that situation.
Yeah. And the one thing I'll say is most medical practices do not have HR backgrounds. A lot of times they're hiring staff that might understand how to operate on the billing side, or manage staff from hey, here's operationally how you do things. But when it comes to the HR side and managing employees, that's where they usually get in trouble. And sometimes they make decisions that they think are going to be helpful to an employee, but then you realize you do it for one and not for another, and it can get you in trouble. So there's a lot of things that I'm sure you help them with, right? Is getting ready to be an employer, what that means and what they have to have in place, so that way they don't see these lawsuits. But if something does come up, that's what the insurance is for. Okay, great. So another employment-related insurance coverage would be unemployment insurance. And that's maybe a little more obvious, but tell us what unemployment insurance does for a business owner. Yeah. So if an employee gets terminated and suddenly they're not able to have that paycheck, they can file for unemployment and continue to receive a paycheck. Generally, that's wrapped into the FICA taxes that you pay with your state. So it's nothing that you necessarily have to carry a policy for. It's automatically covered through those FICA taxes. But you have that as a protection for your employees, because again, if they no longer have a job, they have to have the ability to continue to get a paycheck for a period of time.
Mm-hmm. You're right. And so that is one of the policies that is often mandatory by most states, that you have unemployment. But to your point, it's often something you can acquire through your state. I often say check your state website to see anything specific that's needed there. So
absolutely.
Great. Okay, so let's continue in the vein of employee-related coverages and talk about workers' compensation. Is that a separate policy we should have? And what does it cover, and what are those coverage limits that you would recommend?
Yeah, so workers' compensation generally is going to be required by the state. Again, check your state mandates, and we can certainly help with that. But in most cases, it's going to be required. And this policy protects your employees should they get injured while working on the job or for the company. So think of somebody that comes into your building, trips and falls in the course of their work. Apologies. Something happens that results in an injury, and now they're no longer able to work. That's going to help pay for their medical bills. It's going to help with replacing their income and any other costs associated with that injury. When it comes to the limits, generally what it is they're going to bill you based on your level of payroll. So whatever your payroll is, that will dictate your premium, and that will determine what levels of coverage that these employees will have. Now, again, state dependent, but typically as the owner of the practice, you do not have to be on your own workers' compensation policy. One of the things to know is because it's based on payroll, if you are the highest paid employee, you will drive that premium up. And it's very rare for business owners to file on their own workers' compensation policy. Most of you probably will have individual disability insurance to protect your own income from things outside of even work-related items. But again, the owner's income will drive those premiums up. So having a conversation with consultants like us to talk through, does it make sense for you to be on or not? And then again, what sort of coverage should I get, and with which carriers we can help with all that.
Very good. I think just to point out other things that we might see in the healthcare space, needle sticks, even injuries caused by a patient. I think that's probably a little more rare in plastic surgery, but even when it comes to transferring patients, any kind, it could be patient related or non-patient related, right? We also might be cleaning out the storage closet and pick up a box that was too heavy. All of that, if it happened in the workplace, is going to likely trigger a workers' compensation claim, correct?
Absolutely. Yep.
Okay. So one other insurance, you mentioned cyber insurance as something that could be endorsed on your business owner's policy. I often also see these as a standalone. So, and in my experience, sometimes this is overlooked, and I think it's one of the most critical ones anymore with the environment we're finding ourselves in. So, why would this coverage be so important for a plastic surgeon?
Yeah, so of course we're constantly dealing with people's private information. Everything we do is tied to technology, whether it's your billing system, your email server, and a lot of times it's through other third parties. And whether it's an employee clicking on a link in an email that opens up access to your servers and patient records, or accidentally sending the wrong patient details to another patient. There's a host of things that can go wrong where electronically you're putting yourself at risk. So as you get started, again, having that cyber liability policy or protection added to your business owner policy is a great place to start. It gives you just some base layer of coverage. It's going to be bare bones, and it's going to have a lower limit. As your patient record count grows, now you become more at risk for a couple of things. One, you have more people's data at risk. So the more people you might have to now offer money to because something happened to their personal data. But then you also think, what happens if your systems get locked out or shut down? Right now, one of the biggest problems for small businesses is the loss of their data. It'll shut your practice down for weeks if you have to try to pay somebody to get access to your own data back. So just as an example, somebody clicks a link, they now have access to your records and files. They can lock you out. and then you won't get access to it again unless you pay a ransom. So there's a host of things that these cyber liability policies cover, including the recovery of data. But let's say your business shuts down for a period of time and now you can't operate because you can't gain access to your systems. Right. There's dollars available in that instance as well. So just good to have in today's day and age with technology. But again, as you mature as a practice, having a separate policy is beneficial because it'll protect you and your patients in the event of a breach.
Yeah, I agree. And I think just to kind of come back and highlight some of the things you mentioned about what it covers. If you are held for ransom, it can help with the ransomware or the ransom fee. Yep. It can cover the loss of business for a period of time or help offset, let's say, the loss of business. There's going to be attorney fees involved generally when there's any kind of cyber breach, expenses for notifying patients, whether it's letters or emails. And a good cyber insurance policy is going to have some coverage for all of those expenses. Is that correct?
Yep, including things like a LifeLock account where somebody's social security and date of birth and address and all that was now released somehow through your system. The credit monitoring might also be a part of that as well, of that expense, and they'll help cover some of those costs.
Okay, great. Okay, let's shift gears a little bit and talk about some more of the personal insurances that a plastic surgeon and particularly a newer business owner needs to keep in mind. So this is where I kind of, dance the line of business and personal, because I think it would be malpractice on my part to not bring up that there's some personal liability and some additional coverages that a new business owner should put into place to protect them as they're starting and growing this new business. So one of the things we tend to touch on, and I'd love to have you talk a little bit more about, is what are the life insurance and disability insurance needs that a new business owner should be thinking about?
Yeah, so on both life and disability, a lot of times if you're buying a practice or building one out, if you're borrowing money from a bank, there's going to be some sort of collateral requirement to protect the loan. And generally, they want to see that you have life and disability insurance. Main reason is you are the business. If something happens to you, that business ceases to exist. There's no more revenue being generated. So the bank will want to know that that loan is protected in the event something happens to you. Basically, death or disability. Mm-hmm. On the life insurance side, it's pretty inexpensive to get that. You can get some term insurance that will cover at least the length of the loan. I'd recommend getting something longer than that, or again, talking to your financial planner about your needs for life insurance for your family. But making sure that that loan is protected is key, and you can have a separate policy just for that if you want. But the death side's pretty easy, as weird as that sounds. Disability is a lot more challenging because if you get disabled and can't work, so let's just say suddenly you have some grand mal tremors that now prevent you from being able to be in the surgery room, you want to make sure that you continue to get a paycheck even when your business shuts down. So having individual disability insurance is incredibly important. But when you talk to the bank and they want to make sure that their loan is protected, they're going to say, hey, just let us know that you've got individual disability coverage and we'll underwrite your loan and get you approved. Okay, that helps speed the process up. But what they're going to then have you do is assign your disability benefits over to the bank. So now you've just paid for the practice loan for a practice that's probably no longer in existence, but you default on your mortgage because you've just signed over your personal policy. So it would make sense to get a separate policy to protect the loan specifically. Usually we recommend business overhead coverage with a business loan protection rider. The loan protection piece can be separate, but having the overhead and loan protection together makes a lot of sense. But the risk of disability, especially for surgeons, is significantly higher than death because there's a lot of things that can prevent you from being able to perform surgery. So making sure you've got at least individual disability insurance in place, and then the business pieces as well is important.
Yeah, that's great. I think that's really important to highlight what you said about you might have the personal disability insurance, and then the bank is requesting you or requiring you to sign over the benefits. And I think that could really easily be overlooked. And because, of course, none of us are planning for disability. It's not something we add to the agenda for the week. But that you could really be left in a bad place personally if that's all in one policy and now you've assigned it all to the bank. So thank you for bringing that up.
Sure.
Can you talk a little bit more about the disability overhead insurance? So we talked about there's the personal one to pay personal income. What is the purpose of the disability overhead insurance?
Yeah, so we call it business overhead expense coverage, and it is designed to cover the overhead expenses of the practice while you're gone. So if you think of it this way, at death, you're gone, right? Practice is gone. If you become disabled, you could recover and come back to the practice. Mm-hmm. So the overhead policy is there to cover your overhead expenses while you're out, to buy you time to recover and get back, or buy you time to find a suitable buyer for your practice. So it's going to cover things like the building costs, whether you own the building or lease it, it will cover those payments. Mm-hmm. It'll cover employee wages. You don't want to be disabled for 12 to 16 months and then have all of your employees leave because they're not getting a paycheck. Mm-hmm. Now you're basically starting over. So being able to cover the payroll expenses and benefit costs and taxes is incredibly important. Things like all of your insurance payments and the internet and utility bills and the subscription services that you have to pay, all that stuff is covered under this overhead expense policy. It is a reimbursement policy. So as you pay these expenses, you then get reimbursed. Mm-hmm. So there's a non-taxable event, which is nice because technically you can write the overhead expense premiums off as an mm-hmm. expense, which would make the benefit taxable. But because it's going for tax deductible expenses, you don't pay taxes on that benefit. So it's one of the main policies that every practice should have. You can get started before you even open your doors with about $10,000 a month. As you start to figure out what your monthly expenses are, you can get upwards of $30,000 a month for a period of 24 months. If you shorten it to 12 months, you can get up to 50. Once you need above that, now we got to go to the non-standard market and get some additional coverage. But again, the payroll expense is usually one of the bigger pieces of that. So definitely something you want to make sure you have.
Absolutely. And, Chase, I went through this exercise with a surgeon who was actually doing a new office building an OR, and had not previously had the overhead production insurance in place. And so we're working through a worksheet and to come up with what the average monthly expenses were. And we definitely exceeded the 50,000. It's a bigger practice at this point, lots of employees, and then realized that 50 was about as high as the policy would go. Sure. So being realistic that sometimes it may not cover everything, but can you keep the lights on and most of your employees on staff for a period of time? That surgeon also kind of made the decision to do 12 months, thinking if she was disabled beyond that, she was likely to not return to practice. So 12 months gave her some time to, consider her options and either recover and come back or make alternative arrangements. Would you say 12 months is adequate, or would you advise really to go for the 24 months of coverage?
I think it really depends. To me, 12 months is a short time. You think of things like even cancer diagnoses where you can't be practicing regularly. 12 months is a short time to give up the practice that you work so hard to build. Mm-hmm. 24 months doesn't feel like a long time either, right? When I've seen people get to the end of 24 months and they're like, oh my God, am I going to be able to get back in time? Mm-hmm. But there's provisions in these policies, I think, that help with how long you need to put this in place. For example, let's say you do $30,000 a month and you say, well, it's not enough, but what it could do is maybe pay for another doctor to come in and continue operating on my behalf so that at least we still have revenue coming in. That's a way of self-insuring. So you can use these policies for a number of different things. There's also carryover provisions where if you don't use all of the money in that given month, you can carry it over to future months. But I think, again, it really depends on how long do you want to give yourself to return to practice. If somebody says, if something happens and I've got an option to get out, then I'll just get out, right? But a lot of times practice owners have a hard time parting ways with something they work so hard to build. So usually the longer the better. And you can always get more than the 50,000 or the 30,000, right? Depending. It's just going to cost you a little bit more. So how much do you want to self-insure versus pay the premiums to have full insurance on it?
Okay, great. Well, I heard you say that this is something they could put into place even before opening a practice. Let's run back through each of these policies and talk about the timeline. When, at what point should these policies be activated? And then the follow-up to that then is, of course, how often should we revisit and potentially increase coverages?
Yeah, I mean, so your business owner policy should be done right away. That's something that as soon as you have a business that can be sued, you should probably have something in place. Of course, the property coverage a lot of times depends on the bank loan, right? So if they require certain limits of coverage and it's required to cover so much business personal property, getting instructions from the bank is helpful. But a lot of times to even get the loan underwritten, you kind of have to have some of these things in place. So having that done right away helps. The loan protection piece, to me, can happen really at any time. Getting the loan underwritten, you can get it underwritten with your personal policy, but the sooner you can get that loan protection policy in place, the better. The business overhead expense policy is a good time to get put in place as you're looking at opening your doors, because now those expenses are real. You've got the building, you've got employee wages and expenses. You can start getting that stuff covered right away. Same thing with workers' compensation. As soon as you start your employees day one, you want to have coverage for them if something happens on your premises. So having the workers' compensation coverage is key. After that, I think you should probably review your coverage at least annually, or when big events occur, right? If it's, hey, I've hired 3 new employees, let's look at this and make sure I've got enough coverage. Or again, we've changed computer systems and we want to make sure that our data is being transferred. And now's maybe a good time to reevaluate our cyber coverage. So I'd say at least annually, but especially if there's some big events, or let's say you bring in a partner, those are all good times to just take a look at things and have them updated.
Yes, I would agree with that. No less than annually, and more frequently. And what I'm finding a lot with new practices particularly is a lot of surgeons are maybe even starting in a timeshare situation where they're sharing office space with somebody else, maybe subletting a couple days a week. And I think important to say, you still need some coverage in place. You still have a business that can be sued. You're usually taking in some equipment with you. So even if they're not in their own standalone building or their own private suite for their office, that there's still liability just by virtue of the fact they're conducting business. Is that right?
Absolutely. Yep. And understanding who has insurance where is helpful. Again, maybe you're the person with the building and you're subletting out to somebody else, making sure they've got the proper insurances in place, and requesting certificates of insurance is a good thing to do. So having an insurance advisor and helping you walk through all this is definitely important.
Absolutely. So it seems like we covered the key policies to have in place at the beginning of the practice. What else should physicians keep an eye on for the future? What are some other coverages as the practice grows that they may need to add along the way?
Aside from increasing limits on existing policies and monitoring that, I think some policies that are going to come into play over time might be a key person insurance policy. As the practice owner and the person who says, I want to be in surgery all day, every day, you're putting a lot of faith into somebody else to help you run and manage your practice. Usually that's going to be an office manager of some type. if something happens to that person, sometimes it can really be challenging for an office to continue to operate. So you might have to replace somebody in a hurry, pay a recruiting firm to go out and find somebody, pay for a signing bonus or moving expenses, whatever that is. But you want to find the perfect person to replace the one person that was helping you manage your practice. Having a key person policy on that person, if they die or become disabled, will be a good thing to consider, because again, in short order, you can't afford to have your practice just shut down because you lost one of your key people. And money helps in all those situations. Some other things might be, and I guess this depends on if you're looking at partnership, if there's more than one owner, but having a buy-sell agreement in place, incredibly important. Whether it's a shareholder agreement, operating agreement, you name it, but it's an agreement between owners that says, if something happens to one of us, what happens to my ownership in the business? As I mentioned, disability can be a little sticky because you don't know how long it's going to last, what your capability of coming back might be. And if you never come back, you want to know, am I going to get paid the fair market value of the shares of my business? Because over time, as production decreases while you're disabled, you don't want the value to decrease as well. So having an agreement in place that dictates what will happen is important, but then also funding it with life and disability insurance is going to be key to make sure that you get the value that you were expecting to get when you have to depart from the practice. Or let's say you are the one that survives and the other one has to depart. You want to make sure you've got the funds available to buy them out from their share of the practice. So that way, again, you're not having to take it out of existing cash flow from the business. Let's see. Other than that, as you hire employees, I know especially in today's market, employee benefits is a big thing. So whether you need it for yourself or you're trying to have it as an attraction and retention tool for your employees, having group benefits is another thing you're probably going to want to consider, probably sooner than later, right? Especially in today's market, just finding employees, especially if you're pulling them away from larger practices or hospitals, they're leaving benefits behind, whether it's health insurance, income protection through the disability insurance, maybe some PTO and paid time off and such. Having those benefits in place will be helpful in attracting and retaining those employees. So those are probably three that you're going to work yourself into.
Absolutely. And Chase, the group benefits does come up really as soon as we're talking about hiring the first employee. And I think one of the challenges that we find is qualifying, how many employees are needed to qualify. I know it's not a hard and fast rule, but what are some of the general guidelines if somebody wants to open group health insurance? How many employees do they typically need to have?
Yeah, generally you need to have two, but you have to have a certain participation of the number of total employees you have. So first, we'll start with just group health. I think that's what most people associate with health insurance, where you are creating a group through your employer. There must be at least one non-owner W-2 employee not related to the owner. So if somebody says, well, it's me and my spouse is a W-2 employee helping manage the practice, that doesn't count. It has to be non-related W-2 employee and the owner. If so, that will help you create a group. In order to have an active group, you have to have 75% participation. So if you think of it this way, if there's 4 employees in your group, 3 of them have to take that plan in order for it to be considered a group. Now, let's say of those 4, one of them is on a spouse's plan. They're considered an eligible waiver, so they don't count against your participation, but they have to have coverage through a spouse or a military plan or something like that, that would be qualifying. But if they're just on an individual plan through the state, then that's going to count against your participation. So you have to at least be 75%. So to your point, the participation and qualifying as a group can be tough, especially getting started when maybe you don't even have your first employee. So what we typically see new practices start out with is something called an ICRA. It's an individual coverage health reimbursement arrangement, ICHRA. So what this is it's as an employer, you are deciding to contribute to their cost of individual coverage. They can get coverage through an exchange. They'll have individual coverage for themselves or their family, and then you can contribute any amount you want to their coverage, but it's going to go towards a reimbursement of premium. So even before you have your first employee, you can say, no, we offer health insurance. We'll help you get it through the exchange. That's where the broker will help with that. And then we will contribute towards those premiums. You pick the budget, could be 200, 300, 400, whatever you want to contribute. And then that would be run through your payroll to help cover those costs. So the employee still gets the payroll deduction, the pre-tax deduction of the health insurance premiums, and you're able to help contribute to the cost of that. Where I see most practices make a mistake is they just give a stipend. Hey, here's some money. Well, that's all being taxed both by you and the employee. And it's not guaranteed to be used for the thing they want it for, which is the health insurance. They just say, hey, we'll give you a stipend, and it becomes a line item. But if you want to actually treat it as a benefit, doing it through an ICHRA is usually the best way. And the alternative to that is something called a QSARA. I won't go too deep, but it's Qualified Small Employer Health Reimbursement Arrangement. Now you're just giving dollars that can be used either for premium or out-of-pocket expenses. The difference here is you are giving it to all employees. So if you pick, again, $200 a month, you're giving $200 a month to all employees, regardless of what they have. They're just getting reimbursed for whatever those expenses are, whether premiums or out-of-pocket expenses. With the ICHRA, it's only for those who need the insurance. So really then it's up to the employer. How do they want to budget their dollars, and what are they trying to get from offering that benefit?
Okay. That's really helpful. I think that's not a well-known fact about the ICHRA. And is that something that a broker helps them set up? Do they work with their CPA to set it up? I mean, just without going too far in the weeds, who creates that so you can do it in a compliant way?
Yeah, generally a benefits broker will assist with that. So they'll help you set up the plan. Usually there's some technology fees involved with managing the payment to the insurance companies, because now you have access to every plan on the marketplace. And that can be a little overwhelming in paying bills. So you try to handle that with technology. But they'll get the plan set up, make sure you're compliant with all of the plan documents you need to have and the filings. And then, of course, helping you set up the reimbursements.
Okay, great. Thank you. I think I just learned something new today, which is my goal for every day. So thank you for that. Okay, so Chase, you've given us a ton of information in a short amount of time. This is super helpful. We know that you and your team takes great care of clients. The reason I asked you to do this interview is because we've worked together now on a handful of different practices, and we've really received great service. The reality is, of course, there's hundreds, probably thousands of brokers that are selling these insurance policies. If you're to give advice to a plastic surgeon who's starting a business and they're not sure, how do I select a broker? What would you say are some of the key characteristics or key things they should be looking for when selecting a broker to work with on their insurance coverages?
I mean, I'm going to be biased in that I do think having somebody who's independent helps, right? Because they have the ability to shop the market as carriers get in and out of markets and change. Being able to move from one carrier to another as needed, or if you have claims issues, being independent to me, I do think is an important piece. Having somebody that can help you with all facets, again, I'm biased, but I think if somebody is making revenue off of you, not getting it from one source helps, because now they're not focused on trying to get as much money from you from this one product. Again, at least in our world, we try to be as efficient as possible. And if there's ways to save in certain areas that'll help cover others, that's a key focus of ours, is the comprehensive nature of your insurance needs. But I also warn people about just trying to go to the cheapest option as well. One of the things I tend to see is people will undercut on price just so they can win the case. But then what happens is if there's a big claim, there's no more room to reduce costs, right? So again, a little inside baseball here. Insurance companies have things called credits. that we use strategically for a number of things. But it's basically our ability to reduce the premium in the event, let's say there's a big renewal. So again, on the general liability side, you might have had a small lawsuit and they said, all right, we're going to increase your premium by 30%. Well, we can maybe take 20% credits to help reduce the bite of that renewal increase, as an example. Mm-hmm. That's a good time to use credits. Another time might be we're trying to get some life insurance to fund this agreement over here. Well, maybe we're on a budget still because we're just getting started and we got to figure out how we're going to fit all the dollars into place. Maybe we'll take credits on your commercial insurances to help you pay over here for this policy. So anytime somebody is saying, hey, I can get you the same carrier, but for significantly less, it's usually because they're going to use credits early on to get the case. But then when it comes time for renewal and prices increase, you might get hammered with it, and then there's no relief there because of that. So that's a difficult one to navigate, but I think you'll get a sense from the people you talk to as to what their mentality is around insurance and how they try to use it in a collaborative method.
Yeah, that's fascinating. It's like you let us peek behind the curtain a little bit and understand how the pricing works there. I think additional qualities that I'm looking for in a broker is somebody who's going to educate me, much like you just did here, and not make me feel dumb. I mean, you deal with this every day, all day. So, the vocabulary and the terminology is all second nature. For some of us, we're Googling the terms and trying to act like we know what we're doing. And I really value working with you, Chase, and your team, because you don't make me feel that way. I feel like I can just ask the dumb questions and you don't make me feel silly for asking. So I say with any advisor that your advisor should be an educator and somebody who's going to really help you understand what you're purchasing or what you're deciding, and be on that journey and guide you to a good decision, no matter what that might be.
Yeah, and I'd say, and somebody should never be shy about sharing how they get paid. That's something I'm a huge believer in, is fairness and in sharing of compensation. We all do work to get paid. So if somebody skirts the how do you get paid conversation, that to me is another off-put, right? So whether it's, hey, I'm charging a fee for my advice, or I get paid commissions through a product that gets implemented, having some transparency around that, I think, is a great thing. So it's okay. Ask your advisors how they get paid, because they are trying to make some money as well. But I think being transparent about that is important too.
I love that you said that, because I think we've all worked with various vendors along the way who have been a little bit more closed about that. And I think it kind of creates a general distrust in certain industries. So I think having that permission to ask and to be wary if somebody is going to be dodging the answer to that question. I think that's great advice. And I think the final thing that I've appreciated as a business owner, as well as a consultant to others, is a broker who's engaged and actually understands my business, who seeks to understand it, and who at least annually is going to have a face-to-face, even if it's on Zoom, or at least a phone call to talk through what has changed, what are we predicting in this coming year, and making sure that I have the right coverages in place. Because I think so often we have the initial meeting, maybe we get our policies in place, and there are some brokers who are happy just to send the renewal year after year without actually looking at it and going through it. And my advice to my plastic surgeons, or really any business owner, is insist on at least an annual meeting to talk about it, because almost always something is going to come up that needs to be adjusted. If nothing needs changed, great. You have the reassurance that you still have everything in place. But most likely, as much that changes throughout the year, there's going to be something that we might need to adjust. And so looking for a broker who's going to proactively have that annual meeting with us.
Yeah. And service, right? It's just things come up, whether it's I have a question, Will this result in a claim? Should I file a claim, right? Just those sorts of questions, and having access to a team of people that can help all that, it makes a big difference.
Great. Terrific. Well, Chase, this was super helpful. Thank you so much for giving us your time today to educate us all on the various insurances. We will have your contact info and North Star Resource Group information linked here in the video so that they can reach out if they have any insurance needs.
Excellent.
All
Great
right.
to see you.
Thank you.